There's a company that many have asked me to analyze many times in different videos, and if you read the title, you already know that this is Corsair Gaming, ticker symbol CRSR. Hello everyone, welcome back to the channel. Today we are going to finally talk about Corsair Gaming, their company, why many are talking about a cheap valuation, why I believe the stock is dropping, and many more. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out with the YouTube algorithm. I will be leaving timestamps down below. Now, I have to start by saying that Corsair is definitely a solid company, a leader in the industry in delivering hardware and software for the gaming industry, and you're going to see why. First of all, I would assume you all know that Corsair sells gaming gear, streaming gear, PC components, gaming PC, softwares, and more. Everything a gamer or a streamer or content creator needs for a perfect setup. Other than that, they also have different kinds of businesses which they make money from. For example, they have something called El Gato, which is a leading provider of hardware and software for content creators such as audio, camera, stream deck, green screens, and many more important things. Then they have Origin, which are PCs designed for gaming, which as of what I know, they're considered the best ones in the market right now. But they also offer laptops and more. Then they have something called Scuff, which is basically an innovator and creator of gaming controllers to make them more comfortable and with better designs and better mechanics than the original ones. Lastly, they have a Gaming Sensei business, which is just gaming training platform where anyone that would like to get into the gaming industry could learn from their coaches, professional gaming coaches. Corsair stock is currently trading at $27.70 per share. We can see that the stock went public on September 2020, about a year ago. And let me tell you that if you bought an IPO date, you are more than fine right now. But as many IPOs last year, it got hyped and the stock got to over $51 per share within 2 months, meaning that the stock went up a little over 190% within those 2 months. Since then, the stock started dropping, started to stay kind of flat, and ended up dropping even more every single month to a point that it is currently down over 45% since its highest. This is why one of the reasons why a lot of investors prefer to just wait before investing during the IPO. Let the stock settle for a little bit and then start a position in case things like this happens. The thing is that 2020 was a crazy year and we had several IPOs and went up massively. Same with SPAC mergers, and people were seeing it as a possibility to make a quick buck. But you guys know that this is not my type of investing strategy. Even though I have invested in IPOs before, I do that thinking long term and not wanting to sell it within months. If you did it and you made money, excellent, congratulations. But I believe now is a good time for this stock, and we are going to see why. As I said, the stock is trading at $27.7 per share with a market cap of $2.6 billion, meaning that it is at mid-cap company at this moment. It has a PE ratio of a little over 16, which according to Fidelity, it is way below the industry PE ratio at the moment, and it currently has a price to sales ratio of 1.28, which I believe is excellent. Now, on their second quarter, they reported a revenue growth of 24% year over year, which is incredible because we can see that last year it grew 58% in quarter 2 2020. As the pandemic accelerated its growth, everyone was at home needing computers for work or their kids to watch classes, and many others started streaming, gaming, and YouTube. It impresses me because they saw massive growth last year and still were able to grow 24% more this year. We can see that their biggest segment at the moment is the gaming components and systems, but it is the slowest growing business as their gamer and creator peripherals grew over 40%, while their gaming company systems grew about 17%. So big difference there. Also, their gaming and creator peripheral has the best gross margin between them, which is why it continues growing faster even after being their smallest segment. As said before, they are a profitable company with a profit margin of about 6% last quarter which is the same as last year. Their balance sheet is a pretty healthy one, as it has current assets of $731.9 million and $1.3 billion total assets. But without goodwill and intangible assets, they would have a total assets of about $820 million, which obviously it is less than their total liabilities, but still have way more current assets than current liabilities, and only have $270 million in debts, which is less than what they have in current assets. I do understand that without goodwill and intangible assets, their balance sheet do not seem as excellent as it currently seems, but I believe they are more than fine in the short term, which makes it possible for them to actually focus in the long-term growth and expansion, and even more being a profitable company with a nice cash flow. Corsair is expecting to end 2021 with $1.9 to $2.1 billion in revenue, and analysts are expecting about the same, which would be a growth of about 19.9% year over year, but they are actually not expecting that growth to continue, as they are expecting to report a growth of 5% for 2022. But to be honest, a lot of things could happen in a year, so I would wait and see what actually happens next year. Also, they are expecting the stock to go up between 0.4% to 75%, or on average to go up 43% in the next 12 months, as we can really see that the stock is cheap right now, and analysts know that, but just because it is cheap, it does not mean that it is going to go up tomorrow. Now, one of the reasons Corsair is dropping is because even though they reported strong sales growth and reiterated its full year outlook, adjusted earnings per share came below estimates. The company did attribute this shortfall to higher entertainment outside of the home, and travel began as the economy started to open. In my opinion, I do believe people should have expected that with many companies that this was going to happen. People would start traveling and going to their offices again, but I do believe the pandemic made a lot of people to like the working from home style, and many started gaming, streaming, creating kind of a job to be able to work from home. So in my opinion, this is just a short-term event. As I have said in many videos with many companies, I don't believe it is fair to compare 2020 with 2021 earnings for many companies, as 2020 was an outlier year. A lot of companies saw huge growth, accelerated their expansion and all that, while 2021 is just the consequences of 2020. Another thing here is that people is seeing how insiders are selling stocks way more than buying, and obviously that is going to bring more selling to the company. I believe that is normal in the short term, as this company has been around for over 26 years already, but they just went public a year ago, and it is normal to see insiders wanting to release some capital, which is one of the reasons why many investors just let IPOs settle down before investing, just in case these things happen. Now, there's a huge difference between this gaming company, Corsair, and other gaming companies such as Activision Blizzard or EA. If any of this creates a game and it is not good or not that popular, they could fail, while Corsair just provides the hardware for gamers, just like Ninja or the Gref, which is why I believe many prefer to invest in Corsair than the others. Also, we have seen how the gaming industry has been growing more and more, even now that people is able to make money by playing video games online. It is not like before anymore. Now we have esports and all these professional gamers, which even the people that just started, all of them want to have a big and nice setup like this one. And that is where Corsair comes in. We do have to take into consideration that the gaming industry is expected to be worth $272 billion by 2030, which is a compound annual growth rate of 11%. And obviously, Corsair, being the leader at the moment, could benefit a lot from it. Now, the stock have been dropping a lot. It is very cheap right now. If you ask me, the gaming industry has been growing and will continue growing, as we know that gaming and esports are here to stay. There is money to be made as gamers and competitors and streamers, and obviously Corsair benefits a lot from it. Not only that, content creators are also using a lot of their PCs, even though many prefer Apple products, but it is also an industry that Corsair could attract. I do want to say that the stock being cheap does not mean that it will go up massively massively this month or this year. It is currently trending down, which is why if you are investing in it, you gotta believe in it in the long term. I don't see why the company could not grow every year as well as their stock, but in the short term, everything is unpredictable. I'm currently not investing in this company, but it is a very, very interesting company at its current stock price. I like the company, their growth, the industry, their potential. It is definitely a solid company, as I said in the beginning, with a lot of potential, future potential. The question here is, are you investing in this company? Let me know in the comment section below why you are or why you're not. Thank you and see you next time.